It's now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. You know, folks, I am a treasure hunter, too. I went out digging in the backyard, and I found King Dollar.
Watch out.
We found a piece of gold. Welcome, folks. Thanks for joining us. I'm Steve Rhodes and Tom O'Brien. And welcome to the morning show.
You know where we found King Dollar, folks? Groundhog Day.
Oh, you did.
And Groundhog Day is over. It is over.
I love
Pop
it.
that head right up.
I love it.
I'm telling you, man.
Yeah. Hey, so great show yesterday afternoon.
Dick
Beauvais.
He was amazing.
Yeah.
He really was.
I don't know about you. I received a bunch of comments, emails from listeners or what have you.
Yeah.
It's really, on both sides a little bit, if you will. But it's a great interview.
Yeah, no, and the facts that he had.
He even changed your mind just maybe a tad.
On the banks he did.
Yeah.
On the bank. Well, see, I've always separated. See, what he has done is this, and it's important to do. It's separating the ethical issues from the structural issues.
Right.
And ethically, there's no doubt they should be in jail.
Yes.
Structurally, if you're going to grow up, you might as well be a banker because you got it made.
Oh,
and that's what he has done. You know what I mean?
Yeah. It's good for your golf game too, by the way.
Yeah, no, totally. And it was interesting because when I heard his interview in the morning, I could hear the rage in his voice.
Right.
Right. And I says, oh, this is something,
which is great that you picked up on that.
Yeah.
You're picked up on that.
And there were two separate issues. And that's what he got to get out this time. Do you know what I mean? Yeah, the bank should have got fined. They should do but the reality is that ethically, all the folks that just said, the heck with it, I'm not going to pay my mortgage and stay in for 2 or 3 years, well, that's wrong, too.
Right.
And that's all over the place.
Right.
There's no doubt about that.
Right.
And now what is going to happen, and the shame, this is just a division again.
Yeah.
Because there's no two ways about it. If you're living in the same street,
yes,
and in fact, one person, has been having a good time and the other person has been struggling.
Right.
What you're going to have right now is that, it's going to get cut to the chase.
Yeah.
But, that's the bottom line is.
Well, we'll see what ends up really taking place.
No, I think that will take place.
Yeah.
But you know what? That doesn't matter in the context of all you folks listening, because what really matters is that you want to get up, make money, have a good time, and ethically be clean with yourself and everyone else. Well, be clean with yourself, because if you're clean with yourself, you're all set.
Absolutely.
And that's the way to live. So I really started thinking about it. I says, so what? I mean, that's the basis that I've really come down. I says, you know what? You can't get on someone else's trip.
Right.
What you can do though, and now watch this, folks. I mean, I was bullish in real estate before, but I'm even more bullish now.
Yes, you are. He's like, hey, we're off the bottom.
No, listen why. Why.
And in your neighborhood,
forget it.
Right.
And it's funny. One of the Tigers was saying yesterday is that, oh yeah, there's probably thousands of houses that haven't sold. That's not the case, folks. Let me tell you something. It's already going, and it's going big time too.
Yeah.
It's not. Now watch this. I was sitting outside last night thinking about this. I'm saying to myself, okay, so what's the next move? The next move, folks, watch how this goes. Now this is where that if you understand the foundation that you're dealing with, right?
Yes, okay.
The amount of money you can make is astronomical. Instead of sitting there crying.
Yeah.
Right? So watch the foundation we're dealing with. We know that you had Fannie Mae, Freddie Mac. They were buying mortgages that were no good.
Right.
Okay?
Right.
So you know that happened. Now what you know is that the government has mandated,
yes,
okay, that they're making the rules. You also know that it's a big payoff, okay? And the payoff goes like this.
Okay.
The payoff goes that the government does this.
Yeah.
The citizens, some citizens get a break.
Right.
But that's a payoff break, folks, for votes. And that's votes for Republicans, Democrats, anyone. It doesn't matter. This is a control power mechanism.
Yeah.
Okay? So watch this. Most of the time, you and I are never involved in the payoff aspect or how you can benefit out of that payoff aspect.
For sure.
Okay?
For sure.
But you know what? You are now.
Okay.
And this is why.
Okay.
Because what the government's going to do next, the government's going to be even more involved in the housing. And you know what's going to happen? And I was trying to figure out, okay, I've seen 3 of these, right?
Okay.
And the amazing...
You're like a little chess player.
Oh, no, it's big time. And the amazing part to me is always this, is that I was thinking, I says, okay, now 7 years, 5 years from now, how is this going to come back and be crazy again, right? Because that's what when this happens, folks, you think that no, it never can happen.
Crazy good from the fuel of
no, crazy good, that'll be euphoria again, and they'll give free money out, and the whole thing blows up again. Okay, that's just what it does.
Okay, the cycle.
And that's what a capitalist system has to do anyway, because there's not enough money, the fiat system and all that. It has to blow up.
Yeah, okay, all right.
So I was saying, okay, well, how is it going to happen the next time? And, well, bingo, this is how it's going to happen. Because what you're going to do, it starts off slow, right?
Yes.
And 5, 6, 7 years from now, the market's gone wild, right?
Yes.
And the government's going to be so involved, and the politicians so involved, they could care less. They can say, you got to give them more free money, more free money. It's going to happen all. So in that aspect, folks, that all is that has to be unleashed, and it will still take 3, 4, 5 years. It'll be 5 or 6 years that'll be funny money again. But the bottom line, funny money is going to be back into it again, and the structure is going to be there, and the acceleration is going to be there, and there's only so much.
So funny money from a loosening of
credit.
Okay,
you got it exactly. It will start very slow,
not like a QE3 type thing.
No, it'll just be
we're tightening the noose, and then you start loosening it back up again.
Well, I'm figuring it's loosening right now.
Yeah.
So as it's loosening right now, people get cash. There's plenty of cash, man. There's plenty of cash. People just won't use their cash. There's cash everywhere. Right. Okay. You start using the cash. It loosens up more. The leverage starts going up a little bit more. A little bit more.
For sure.
Same cycle.
Yeah.
30 years. I'll end up seeing a fourth one too.
Yeah.
Ba-boom.
Oh, good.
And folks, you want to be on the bottom of the ba-boom. And where my head's going, I got it to gold to 282.
That's right.
That was 10% off the bottom. And I think I'm going to be into real estate the exact same price, about 10% off the bottom.
Okay. Right.
Where we are right now, I think we're about 10% off the bottom.
Yeah.
Right now.
Yeah.
You know what I mean? That's fine. Yes. I grab that because you know that you've started. And what happens at 10% off the bottom is that it's shaky at the beginning. It's not going to be, it's not, well, in a good way. I like it. You want it shaky because if you're spreading it out and you're buying, it doesn't, it's a good scene. Man.
Right. Well, and look, I mean, you talk about the real estate market or our markets here, we're never, like, you'd love to be able to sell the top tick and buy the bottom tick. Right. But you don't, that's not how you make money. That's how you drive yourself nuts, batty, crazy. You just simply, you got the average true range. You've got it. 10% on the outside side. You're just dealing with the average true range of it.
Totally. Yeah.
So it's Go Long America then, baby.
Hey, listen. It's Go Long America. That's what, well, tell them about it.
Well, folks, we had the Go Long America contest back in the Christmas season, holiday season, or what have you. And so, Tom, the road trip is now all set.
Yep.
We're going to start off on February 21st. So it's about 10 days from now on a Tuesday evening.
Okay.
Tuesday evening, we start in Denver.
Right. We'll be
so it's going to be up on the site sometime this afternoon.
This afternoon. Before you do, this afternoon, Steve's doing the 4 o'clock show.
Yeah.
Before that, it'll be up on the site.
Okay.
Everything.
Okay. So we're going to be in Denver, February 21st. We're going to be in Spokane. And thank you, folks, for listening. We know we're coming live in Spokane right now on the 22nd, and on the 23rd, we're going to be in San Francisco.
Right.
And it's going to, and so we want to see as many folks as we possibly can. What we're going to have folks do is certainly sign up early. You want to sign up early, reserve your spot. And then because of just simply limited capacity, I mean, if you can't attend for some reason and you've signed up,
please don't sign up.
Just don't sign up, or just let us know if you will. It's free. It's absolutely free.
Right.
We're going to be putting on a 3-hour workshop. Tom's going to take 2 hours and 59 minutes, and I get 1 minute of it.
Yeah.
No, we're going to split it. It's going to be a great workshop. Absolutely great time coming out to see everybody. And just really part of our Go Long America. And there's going to be a couple other ones that we're going to do as well.
Right.
But this is the West Coast trip, if you will.
And so,
because we're going to get over to Boston, something in Orlando, Tampa, or what have you.
Right.
And, and so we finally have that all nailed down so that we can do everything out on the West Coast and just working out the radio shows. And these are going to be, I think it's going to be like 6:30 to 9:30?
6:30
or 6 to 9, something. It'll be on the site, but it's going to be an evening thing, just a 3-hour evening thing, and maybe an adult beverage or something afterwards.
I don't know about that.
Oh, it's a tight trip because we got to hop on planes, get to the other cities, get things set up. So So and then also, folks, today in 2 hours, or just under just a little bit over 2 hours, Tom is going to be at the Gaylord Palms, which is in Orlando. Really, it's in South Orlando.
Right.
So if you're in the area, He's going to be at the Traders Press booth. He is going to be signing his book, The Art of Timing the Trade. Folks, they'll have books there. If you already don't, if you have yours, you can go ahead and bring it in.
Absolutely.
Okay.
Right.
And if you don't have one, there's going to be books there for you to buy. Maybe get a couple of them so you can give a gift to someone. And
if you do buy it there from Traders Press, folks, you will get 2 workshops. The webinar is absolutely free, and it's only there.
Yeah.
But if you
it's only today. It's only today if you can get there and buy the book from Traders Press and.
So we'll be up there growling and prowling all day.
Yeah.
And so, listen, this is perfect. You get the Pebble Beach happening.
We do.
I know Bill Murray was just on CNBC.
Oh, is he?
Yeah, he called me up. He said, Groundhog Day's over.
Oh, I love it. Folks, you got the Dow's off about 84, S&P's off 11. We'll be right back. It is Go Long America. We're looking forward to seeing you.
Have a great one. Have a safe one, folks. Look forward to seeing you if you're up in Orlando. Thanks, brother.
All right.
Okay, man.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. And Tom is on his way over to Orlando. So, folks, if you are in the Orlando area, go over to the Gaylord Palms. It is the World Money Show. Tom will be there at 11:30. You absolutely want to, and that's at the Traders Press booth. So check that out if you are nearby. Around the markets right now, you got the Dow is off 84 points. S&P's down 11. NASDAQ futures off 17. Small caps down about 9. King dollar up 53 ticks. If we take a look at just the pre-market, post-market here, what is leading on the way up, what's leading on the way down, you got True Religion, ticker symbol TRLG. That's off 21% this morning. That is down $8, trading out around 28.70. Let me take a look on the upside here. You've got Alcatel-Lucent up 15%, up a couple of bucks in the pre-market. You've got Overland Storage, they're up 9%. Kona Grill, ooh, that sounds like a pretty good place. Wonder if that is in Hawaii. Kona Grill, we got to go check out Kona Grill. They're up 6.5%. Ticker symbol on that. That's an easy one to figure. KONA. Sierra Wireless, they're up 6%. NXP Semiconductors, they're up 4%. Brooks Automation. Move Inc. Well, that's an easy ticker symbol. MOVE. Move Inc. is on the move. They're up 3%. On the leading the charge down, because you got the markets down. So let's see what else we have behind True Religion. You've got XIDE Technologies, ticker symbol XIDE. They're down 19%. Apollo Global, they're off 15%. Nuance Communications, NUAN. I think they are a high flyer in the IBD, or they were at one time. They're down 12% off, looks like off about $3.76 or so. Again, 877-927-6648. So let's go take a look at the futures market. That's what I've got up on my screen. You can follow us on Tiger TV. Just go to the homepage at TFNN.com. Click on the upper links. You will see a Tiger TV button. You can click on that, or over in the right-hand side, you'll see a red bordered area that will allow you to simply click on that, and then you can store the bookmark it on your iPad, your iPhone, your Android device, and then it's real simple. Come 9 o'clock in the morning, you just click on that, or come 10 o'clock today, you would click on that. You can just simply watch the show live, or any of the great live programming that we've got out here. And what you're able to do is you're able to take a look at the charts, because it really is all about patterns, folks. You've got patterns in your life, and really what you have to realize is that the patterns that have gotten you to where they are not the same patterns that are going to get you to where it is that you want to go. So that's why we want to be able to teach you pattern technology, pattern recognition that's out here, your own patterns, because it's always about finding another gear. It's always about finding another, and there's nothing like a weekend in order to be able to re-energize, re-gear up. It's already February 10th. So what are we, 6 weeks? Something like 6 weeks into the new year. How many of you folks made resolutions, but you're really not resolute about the outcome that you want to attain? Now is the time to do it. Now is the time to make changes. And we take a look at the ES Mini. What we can see here is that so far what it's done today, it's traded down into the 10:30 time frame on February 7th, making a move of a move, 100% move of a move. What you're also doing, you can see off of the this is a 30-minute chart that we're looking at. If you come off of the 12 noon time frame on February 8th, all the way up to the high that it made out here on at 9 o'clock yesterday morning. The high out there on the ES Mini got up to 1352.75. If you measure those two swing points, meaning from that 1352 all the way down to the low made at 12 noon, that low there was 1338. Take that difference, multiply times 1.272. It's going to get you right down here into the 1333 range, 1335 range, and that's where the at 9 o'clock this morning. So in that 9 o'clock bar, meaning 8:30 to 9, you had the ES Mini get down to 1334. So it's an important area for it to hold. You've got the expansion. You've got a move in essence right here. And if you go back even a little bit further, let me go ahead and get rid of what the patterns, if you will, that I've got up there just to clean the chart up just a bit. You can also see, this right here, this candle where I'm at right now, 9:30, 9 o'clock in the morning on February 3rd. February 3rd, I should have known that. February 3rd, that's where we had the real breakout. You can also see that what the ES Mini is doing right now, it's coming against that breakout area. You can see if you just take a look at the crosshair going across my screen, that is the widest range bar as we take a look at this portion of the ES Mini. So it is no wonder that what's happened as the ES Mini this morning has moved down, as King Dollars moved up, as the Euros moved down, folks, that it would stop right here at the 1.272, right here at the top of that breakout area. 877-927-6648. We get back, we'll go see how these markets are going to drop. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow down 110 points. The S&P's off 12. Composite down 27 points. Small caps off about 11. Small caps leading the charge on the way down 1.2%. Apple only off 33 cents right now, trading out at $493.17. I'm sure that we'll look at Apple sometime during this hour or the next hour. The Money Masters will be doing that solo, if you will. So I'm with you for the next hour and a half. And you've got Cisco trading down 24 cents. Google off, looks like about almost $7. And what I've got up on my screen here right now is the SPY chart. We're looking at just simply a 5-minute chart here, just to kind of gauge the volume, if you will, coming out of the market. So it's going to be important to take a look at this next half hour. You've got a lot of pent-up, built-up activity, if you will, in that first 5-minute session, though. What you've got is volume coming out of the SPYs. Did 4.6 million shares. That is on the way down. We're going to see if volume is going to continue to pick up. So where are the SPYs trading to? Well, let's just simply, just for the heck of it here, let me throw up the tool, which helps just simply to measure the swing points. And what we're seeing here is just like we were taking a look at on the ES Mini. If you come off of the time frame here on February 8th, the swing point there looks like about around the 11:45 time frame. We were down at about 134.31. From that low all the way up to the high that was put in yesterday around 9 o'clock or so. What you're in the morning, what you're looking at here is you're looking at 1.272 expansion. So let's see what else. Now, what we're coming off of all the way back here, this breakout, which is important to take a look at. So we're coming back to, well, this looks like a breakout from January 31st, if you will. You can see you've got a 0.382 retracement of that. So this area here is important for it to hold. Now, what has been really interesting, in these markets, now just simply, let me just come back here to the actual index. Let's just take a look at the S&P index here. You can see how it is, trading off of the highs from yesterday. Candle formation, if you will. We don't have a bearish engulfing setting up, looks to me, because we had the S&P finish yesterday out at 1351.95, where it opened this morning was just a little bit underneath that, actually opened at 1351.21. And so where is the S&P headed to, on this pullback? Well, right now, its first area of resistance, if you will, is going to be this descending tops area. And this descending tops, folks, is going all the way back to the highs from 2007. So you just simply start with the top of that swing point from there, just to draw your trend line, if you will, and then your next point of target's going to be May 2nd. May 2nd, which is where it looks like to me the S&P still wants to get up there and tag that. It hasn't been able to do that. The low on that point for the S&P is 1358.59. So. And if you take a look at that trend line came right in here. That trend line, we broke above that trend line on February 3rd. That's where the market finally, if you will, broke out of this Gartley pattern. This is a 1.272 Gartley sell, We waited to see what the markets were going to do. We were trading inside this little triangle here, this wedge pattern that really had formed itself. That was still coming from the descending tops, if you will. And then just simply it's this red line coming up from the bottom here of December 29th. So it created this little bit of a wedge. We broke up to the upside. And when the market broke out to the upside, to me, that was suggesting some real underlying strength inside these markets, because these are patterns here that absolutely should have failed, because as we went across all of the indices, most of them were making either butterfly expansion patterns or Gartley butterfly sell patterns or Gartley sell patterns. And those things are powerful, folks. And we were coming into some lunar stuff, but forgetting that, we just simply had all these patterns that were out there. Still, you don't know which way the market is going to break. In this case here, February 3rd, which was last Friday. I think it was last Friday, wasn't it? Yeah, because today's the 10th. So it was last Friday. The market broke. It broke on the unemployment report, broke out with conviction above this area. So now it makes sense in a pullback. If the market can pull back, the first area that it's going to hit, it's kind of interesting, if you will, as I take a look at this. I just simply draw the patterns on the chart to get an idea of where the markets are moving up to or down to. In this case here, look at the intersection that we've got right here, which happens to be basically today, which would take you right into this uptrend line here, and also right down into this downtrend line coming off all the way from the descending tops. What price range are we looking at? That would be in the 1338 type range. Of trading out at 1341, so it wouldn't be real big stretch for the S&P to be able to get down there. So now what I was saying though, you take a look at the underlying strength, right? When we broke through, and I'm talking about the market. When the market broke through on February 3rd, broke through these patterns here, broke through this Gartley sell, to me that was signaling underlying strength here. And then when you take a look at the markets, as it's made a slow chug up, if you will. This slow chug each day, we've had grease fires, if you will, and then it seems like the bulls come in and they take their hoses out and they put out the grease fires, and it keeps inching a little bit higher, a little bit higher. We know that we've got tug of wars going on out there. The question is, how about today? Is the tug of war still in place? Are the bulls just sitting on the sideline right now with their hoses getting ready to put out that grease fire? And is it going to inch higher? We'll certainly find out. But the first area of support, if you will, on the S&P is going to be right down here in that 1338 area. If we let's take a look at let's take a look at the NDX 100 now. Let's see what the NDX 100, because that's been a fireball, if you will, of course, led by Apple. And the trend here, if we just try to find expansion patterns, it's probably going to be tough to do. But what we're going to do, folks, is we're going to start with the actual highs in the NDX, which means we're going to go back to the July 26, 2011 time frame. I'm going to use that as the swing point high. We're going to come all the way down to the low. The low on the index happened to be put down here on August the 9th. Look, this is why you want to use stops, actually. Just for 1 second here, you want to take a look at how quickly things can actually drop versus the gradual move upward. Well, you just take a look at this, because you take a look at the July 26 high here and the cascading waterfall. It only took how many trading sessions? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trading sessions to take back. Let's figure this out. To take back, you went from October all the way to July. So holy cow, October of 2010. So it went all the way back to October of 2010, all the way up to July 2011. So you took 10 trading sessions. 10 trading sessions, folks, took back about 13 months worth of gains. Oh my, that is absolutely the entire reason why you use stops. No matter what you think about stops, other people can see them, other, money, market makers can see them, they can take them out. Then let them take them out, folks, because there are times like this where the cascade is in place and you just simply want to be out with your capital. You want to be able to live, to breathe, to trade another day. You want to understand that the money business is like any other business that you've ever owned or operated. Your picture has to not be this trade, this week, or this month. It has to be, when you run a business, folks, you run it over a 1-year period of time. And so what you want to do is you just want to make sure that you can survive, because the reality is, you just take a look at all the businesses as you drive around that start up, good economy or bad economy, and you take a look at the businesses that fail, folks, okay? 80% of businesses fail in the first year, but not you. Absolutely not you, because you're with us. We make sure that you've got the right protection in place. So if we take a look at the NDX, which is really being powered by Apple, somewhere around 15 to 20%. I don't even, I'd have to go take a look and see what the actual weighting is inside there, but absolutely a huge weighting. On the NDX 100, I think that the February 3rd area is the most important spot for you to be taking a look. Why? Because, again, that was last Friday. We gapped up. That gap is still in play here right now. When the NDX is absolutely, it was for a while there. It was kind of a little bit of a laggard. It is absolutely back into that leadership role. And so from a leadership role, this is going to be one of the areas that you're going to want to take a look at, because if this starts to truly break down, that will be sending out a huge signal. That will be like Paul Revere riding through your neighborhood, telling you to get out of Dodge or take a look at the other side of the trade, if you will. On the NDX, what you're looking at is the low of the February 3rd session at 25.14.99. That's an area that needs to hold in order to stay bullish in this marketplace. A pull back to the top of that February 3rd, not a big deal. You want to see it really stay above February 3rd. The high there, 25.32.26. Let's go take a look at the euro, because it's the queen euro that is the culprit, if you will, this morning. So let's switch over to that currency pair and see what it is that we've got going on out here. And so, what just happened to be, I must have drawn this on my screen here yesterday. And what I'm talking about here is just simply an expansion of swing points. In the case of the euro, I was going to the top of the swing point made at 9 a.m. on February 3rd, so last Friday, all the way down to the low. This is a 120-minute chart, by the way, that we're taking a look at, all the way down to the low that was put in at 9 o'clock on February 6th. Now, the expansion of this swing point here happens to take the 1.618 all the way up here to this 133.147. And look at how the euro made it all the way up there, and it stopped at that expansion. It's why I want you to be able to understand, expansions, ABCs. Certainly want you to be taking a look at long-range bars, because they're important, both long-range bars on the way up, long-range bars on the way down. Well, what do we have during the last 2-hour session that ended here at 9 a.m.? You had a long-range bar. Of course, this was coming right down into the breakout at 9 o'clock on February 7th. So just a few trading sessions ago, 3 days ago, if you will. If we take a look at now, I'm going to get rid of that expansion that is out here. And now let's take a look at the retracement. So the retracement coming off of that low here, looks like we also had a bullish engulfing on that 120-minute chart. And we'll come up here to the top. And what we can see is that, we have not made it. We, again, being Queen Euro, if you will. Queen Euro has not made it down to the 0.618. But the way that this is trading, folks, when you break through this 0.382 area and you break through it with conviction, not just like a little bit, and conviction is that wide-ranging bar. It absolutely says that 131.388 area, is still in target. So this is the 120-minute chart area. You would have preferred, I would have preferred, if you're bullish or what have you, you would prefer for it to have gotten down to that 0.618. You'd like to see it kind of stair-step its way down there. If it's stair-step, because if you come down just as you broke through that 0.382 with conviction, with a wide-ranging bar, then that says, okay, then you're going to come down to that 0.786 area. That would get you right down here into the time frame of February the 6th. Let's go ahead and let's dive down just a little bit further inside here, and then we'll go ahead and back it out to the daily chart. So if we dive down just a little bit further, let's dive down into the 30-minute chart here, see what we see. See if anything pops out. Nothing really popping out at me here that we haven't already talked about. Let's go take a look at the daily chart here real quickly. And on the daily chart, what we're seeing here is this line right here. We showed this yesterday. This is the 0.382 retracement from the move of October 27th. We know that's an important swing point area for us. In fact, it becomes your area of support likely in most of the, if you're trading the ETFs that follow the markets, the October 27th area becomes an important support area. If you're trading the sectors, it's going to become an important support area. And we'll go take a look at some of those sectors as well. But right now, this 0.382 area, so it bounces to the 0.382 area. And we're taking a look at the euro going from October 27th all the way down to the lows. This is the daily chart now that was put in on January 13th. So it pulls back to the 0.382. That's normal. Normally, the way that the retracements work is you move up to a 0.382, you let some folks off the elevator. Maybe it was some folks that were long, instead of go long America, they were go long the European Union, if you will. And so, and this was a nice move, most certainly, because you were down around 126 all the way up into the 130, got up to as much as 133. Did get up to 133. Why isn't that? Yeah, 133, 204. So it's it's a nice swing right there. Some folks might take some money off the table, and now it's backing down a bit. And the real key is how far is this going to back down? Is this setting up an A to B equals CD on the way up? Well, if we just simply, in fact, let's go ahead just to make it a little bit cleaner here for you. I didn't want to get rid of those. I should have paid attention to what I was doing. Well, now that I'm that far into it. Now what I had there, folks, was I had the August 25th and August 26th area. And so, later on today, I'll go ahead and put those lines back in. And so let's come back here. Let's take a look at the retracement now pattern. So we're going to come off of the low from January 13th. That was Friday the 13th, I do believe. And right now, the 0.382 retracement would take you down in the 130.05 range. And so it's going to be important to see how the euro retraces from here, whether it's coming down with any kind of conviction. And that would be really, and when we take a look at the currency market, the only real way to gauge conviction is really taking a look at those long-range bars. There's no volume setups that we can take a look at. Yeah, you can go take a look at the U.S. dollar, but the U.S. dollar index, it's driven from Queen Euro, if you will, and then the Japanese yen, Great British Pound, Swiss franc, and the Swedish krona. You got to love that. Coronas. I think I was having a few of those Coronas last night. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry, or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Hope you are having just a fabulous Friday. Right now, you got the Dow is off 100, S&P's off 10. Apple, good old Apple, up $2.57. There's no bear in Apple. Hey, folks, if you do go over to the World Money Show, and it's over at the Gaylord Palms, stop in, see Tom, and make sure you give him a bear hug, would you? Don't just shake his hand. Give him a big bear hug. Of course, he probably just drove off the side of the road here. I'm sure he's listening on his route there. Let's go to Aaron in Dunedin. Aaron, thanks for calling. Thanks for holding.
Thank you for taking my call, Steve.
Oh, my pleasure. How are you today?
I'm great.
Ah, that's good. Yeah. Good. You wanted to take a look at Great Basin Gold.
Yes.
Tell me what you're doing or what you're looking. How can I help you today?
I'm thinking to buy it.
You are? Okay. What area are you thinking of buying it right here, or are you looking to buy it at a lower price? What's your thoughts?
I'm trying to decide if this is a good point to buy it right here.
Well, I tell you, this has been a frustrating stock for some of us around here at TFNN. As I take a look at the chart, here's what we're looking at. And on Great Basin Gold, what you had, Aaron, is on February 6th, you had a nice breakout. February 6th to February 7th, you broke out with 5.8 million shares. Now, you broke out the day prior on December the 6th, you had 3.2 million shares. You were coming into that breakout area here 2 trading sessions ago on February the 8th. You came down with 4.5 million, and that was coming into that 3.2. Now, that area held. It also was coming into the swing point from November 29th. That swing point had 6.2 million shares, and it rejected it. It's trading down this morning, and, what I would suggest doing here, let me just dig down intraday a little bit. The volume on this isn't absolutely huge, so let's take a look here. So if you take a look at this trade here, the volume that you've got on Great Basin Gold goes to 1040 yesterday morning. And the volume that you had there was 671,000 shares. The low on that was 94 cents. You're trading at 98 right now. So if you want to go ahead and nibble on this, I would do it at that 94, 95 cent range. Even though it's only 3 cents, you might as well let it come back to that area. Or what you can do is let it get down there. See if it goes a little bit further down. Maybe put an order in above it. Let it prove itself. But it looks like it's got some pretty good support here. If you will, it's been a frustrating stock for me. So are Are you torn to wanting to trade Great Basin Gold? Is there some affinity there of some sort, or?
No, I've heard you say that you have it. Tom speaks highly of it, and I know that if the dollar goes up.
Well, I had it. I've had it with that stock. No, I'm just kidding you. I did have it. We did have it, and we ended up getting stopped out at break even. And actually, that is not frustrating, because if I'm in a trade and end up getting stopped out at break even, I can deal with that. We're not back in it, and it is not back on my buy list. I will say that, at least not now. So it's not that there's not a setup here, and maybe we're just simply in a tight trading range, but I think there are probably better gold stocks to take a look at.
Okay, good.
All right, Aaron?
Cool.
Okay, you bet. Okay, Aaron, thanks for calling, and have yourself a great weekend. Folks, stay tuned. You've got myself doing the Money Masters show. We'll be up in just a few. It's a great Friday because after that show, you got Basil Chapman in the on-deck circle, Nico DeHaan from 12 to 1, David White 3 to 4. I'll be filling in for Tom on the Tom O'Brien Show from 4 to 5, Ken Shreve from 5 to 6. Folks, have a great morning. Just remember, folks, you are bigger than anything that possibly can happen to you. We'll be right back, folks. Have a great morning.